Hi, Dominique, and welcome to another edition of The Week Ahead. How are you doing?
Fine, Andrew, you look all wintry with your sweater, no
Thank you.
palm trees swaying in the
No, I
background.
know, I know. Actually, hang on. It's better today, but it was pretty cold last night, I have to say, and pouring rain. But yeah, so let's kick off. As we always like to do, is kind of a recap from the past week, and obviously we've had a fairly historic past week. Um, lots to talk about, impacts and the stuff you do. So let's kind of dive right into the main stuff, your big takeaways.
So, first of all, you need to discount Trump's daily pronouncement because he's been going back and forth on tariff. It's likely that tariffs are in, if only to pay for the tax cut we're likely to get. And also, this is Besant's testimony. I mean, he made clear that tariffs were going to be a source of revenue. So we need to move away from the daily I'm not sure what to call it, our president daily tariff pronouncement. I think actually we're starting to see some idea of the sort of longer term strategy. Like, for instance, the comment on the Fed was misquoted. You know that if, the media rushed to say that Trump would demand lower rates from the Fed.
Yeah.
Actually, what he said was that I'm going to get lower energy prices, and then the Fed will have to lower its interest rate, which is
Might
plausible.
be true. Yeah,
Yeah,
yeah, yeah.
exactly. So lower energy prices, that is going to be one big goal they have. And they're going to do it both domestically through higher production, but that's going to take longer. I was wondering if they could get states to ease off on energy taxation. Like, for instance, in California, where I live,
Yeah.
gas prices are the highest in the US. So, but definitely through all the things we discussed, production, liberalization, blah, blah, all that stuff. But also externally, I think there's going to be a conversation with OPEC on a more explicit trade exchange between the US military umbrella and oil prices. So that's on. And if
And
they,
we're assuming they have at least 2 million barrels that they could turn on if if a deal was made. Yeah.
yeah.
Yeah, and
So,
that can bring that could bring down prices maybe $7 to $10 probably.
well, if it starts, having an impact on gas prices, it's very possible that core will follow headline inflation. Um,
Yeah. I meant
so
oil. Yeah, yeah. I meant oil coming down. Maybe that,
yeah,
that gets oil into the high 50s or something. And yeah, the
yeah.
pass through then would be,
So there is that, and I think the other plank is really about growth, boosting growth, including through FDI. So we had this big Stargate. I mean, it
yeah,
sounds. Isn't there a science fiction movie called Stargate? So it
yeah,
was a little bit, newsy, showy, and it's unclear whether there will be 500 billion or what did Musk say? Only 10 billion had been. It's unclear how much it will be. But I think this is one of many such deals. And the thing about those deals, for sure, investment in the long term raises the supply capacity of the economy. So it's disinflationary. But I think what people tend to overlook is that before you get to the long term, you have to build that investment. You need to buy the materials, the machines, hire the people. That adds to demand, and that is actually inflationary. So this this flurry of of foreign investment, plus another thing that was in Besant's testimony, and I think could be a really important part of the economic strategy, is to get countries to buy US exports above and beyond what they are already buying based on a market mechanism. That means more things will have to be produced in the US, and the US doesn't really have extra idle capacity. Unemployment is very low. If you look at how the trade balance is worsening, it's really showing you that there is pressure on US capacity. So that's also going to boost growth and inflation. So you
Right.
could have costs coming off if they manage
And it
to.
takes time to, I mean, if it's manufactured goods, it'll take time to produce more.
It will take time and you will need extra workers. And if we expel all of the illegal
Right.
migrants in this country, the long-term one, not the recent arrivals or people who have
Yeah.
issues with the legal system, but the 11 millions who are in the country,
Yeah.
uh, it's going to hurt, not necessarily in manufacturing, but in construction and agriculture.
Yeah.
So
Yeah. I was gonna
prices
say,
go up, wages could go up. So it's going to be interesting because you could have, on the one hand, a decrease in cost, and on the other hand, an increase in demand. And it's unclear where it's going to leave inflation. It depends on the timing, sequencing, and so on and so forth. But I have to say, for me, as an economist,
yeah.
this is by far the most interesting administration in terms of, trying new economic strategies that I've seen in my entire career. So good opportunities, lots of volatility.
Lots of volatility. It did kind of harken back. I was like, we always say there's so much volatility, but I guess there is, but a lot of it is like jump risk, where in fact markets aren't sure or they're waiting for a big event, and actually the underlying assets for most of the time doesn't move very much. And then there's a jump risk, which could come in day two or day five or something. And, which I guess should be good for market makers. Um, or you need to have a really solid medium term view of what you
100%,
think, or else you're going to get whipped around. By the way, is what I always say is like, I think we
100%.
need more of these. What is our core medium term view of XYZ? And then we can put tactical things around it, but there has to be a kind of a North Star, or else you're just going to, get whipped in so many different directions, and you will be uh, caught on that jump risk at like the wrong time when the option just expiring, whatever it is. Um,
100%.
but no question, this is the most interesting, creative um, administration that maybe ever. I mean, it's really, and a lot of it is I wouldn't say like going against like traditional economic kind of views or like the strategic approaches. In some case, it is, but some of it is just like it's just a completely different way of thinking about things, and
100%.
and it may work amazing or it may make things even worse. Like, and I guess depending upon different sectors or
And the execution. But you're right. I mean, we have basically economic policy run by big picture thinkers who don't feel constrained by academic economics. And that is so interesting.
yeah, that's amazing. The only thing I think sometimes is we're talking about these like top down kind of structural new approaches to something, but then you still have a supported by a very free market, non-command, non-like, government decided command supplying of that thing. So they could say, well, we want to do way more of this stuff. And it's like, yeah, I guess we'll see. If we're going to sell way more, you know, packaged
About
goods, yeah,
yeah. But about free market, I'd say one thing that I think is missing from that whole policy conversation is competition policy. I mean, we got positive signs in the sense that Trump appointed Republican FTC commissioner that was more pro-competition of the two Republican commissioners. But competition policy is really important short-term and long-term. Short-term because it will help to keep inflation low, and long-term because everything I've seen in my entire professional life makes me think that competition is a way to raise growth, productivity, everything.
And
So
probably lower inflation and probably lower prices.
100%.
Yeah.
So it's a pity it's not figured more prominently, in the
As opposed to
confirmation.
just this top-down global, this is how America interacts with different countries of the
Yeah.
world.
And
We may get to that. Yeah.
during the Besant hearings, there wasn't a single question on competition or directly on competition, which is a bit of a disappointment.
Yeah.
But anyway,
Yeah, you can say like,
this is
there's
just
so
the
much
first
focus on
week.
healthcare, or health insurance, medical insurance, and forget about drug prices and stuff, but like general healthcare, general health insurance. I mean,
100%. 100%. So
how
there
do
is
they increase, yeah, competition there and reduce prices? That would be a big deal.
the transparency, like the hospital rule that actually was passed under Trump 1.0, that hospital have to disclose their costs, which they never did, or never did in a manner that is easy for anyone to see. So there is this big discussion about private versus, single payer healthcare, but we've never really implemented truly market-driven and competitive healthcare, and there are huge productivity and competition gains that could be done by doing something that is private, but where we have true competition, transparency, and so on and so forth.
Yeah.
So this administration is coming in as disruptive, and there is plenty of inefficiencies in the US economy that could be disrupted to the benefit of everybody involved, no question.
Yeah. Yeah. I
Okay,
mean, it's the most interesting, good or bad. It is absolutely the most interesting administration approach, like I've ever seen. And I guess you're saying the same. And I said, I mean, you're in the U.S. and obviously as an American based in London, talking to all my friends, even outside of finance, even a lot of traditional Democrats, and like people are really excited. Um, so
100%.
Paul Tudor Jones, when he's saying it, like animal spirits are like, or was it Drunken Miller? Like, yeah,
Yeah,
absolutely.
though
And I'm kind of in that camp too. That
though it's unclear between us, there is this trade-off between higher labor income share and higher profit, and one is going to benefit the stock market, the other one is going to benefit
true.
real median income. So there is that trade-off. Maybe I suspect the plan is to boost growth, to keep growth high enough so that they can have both a good stock market. And Besant said actually the Wall Street will do well, but perhaps not as well as before, because this is really Main Street, not mainstream, definitely
Main Street, yeah.
Main Street time. So
Right.
it's amazing. I mean, populism, Republican populism. Anyway,
Yes.
we should stop
We
gushing.
digress. Yes, yes. Okay.
Stop gushing.
And then okay. So what are there any really big things that kind of stuck out, or we can go to the week ahead?
Um, I think, these are my main takeaway. Don't take Trump's tariff pronouncements, short-term tariff pronouncement at face value. Tariffs are going to be increased. They are going to be a source of revenue. He has a consistent plan to get inflation low and lower rates if he can implement it. through energy prices, and he wants to boost growth. So these are my main takeaways from the first week.
Yeah. Yeah. And I saw that where he may not have always been the biggest fan of all like the big tech, he was upset that the UK, I guess, was threatening to fine, um, I guess, because of their ecosystems, closed ecosystem, more Apple, but Apple and Google. And he said, why are you attacking? That's a tax on our company, US
So
companies.
I have to say, Keir Starmer didn't try I mean, it's a bit hard to understand what Keir Starmer is up to. For starters, he sent 100 Labour Party consultants to help Kamala Harris, and he has this very belligerent attitude in the Ukraine when Trump wants to shut down that war, and then threatening to tax American multinationals when clearly
The timing looked
yeah,
strange.
it's a bit, I mean, I sit in Los Angeles. What do I know about what's going on in the UK? But from where I am, it looks a little strange.
Looks strange, yes, agreed. Okay, and then on the general data, any key data pieces, anything surprising, market reaction? Are you surprised yields are slowly drifting lower from all the
Yeah,
announcements and data and so yeah,
yeah. So maybe people are buying the lower energy story.
yeah.
We'll see. No, it was there wasn't much going on data-wise this week. It's this coming week where we will get more important data points. So first we have
Nice.
the
Yeah,
Fed.
let's go to it.
So I think on the Fed, they they prepare for a possible battle royal with the administration. So to be fair, both Besant and actually Trump have said they would respect Fed independence. I think on the Fed and Trump, we will have what we have in tariffs, with tariffs. I think a sort of if rates don't come down, frequent comments from Trump complaining, but Besant said that monetary policy, he would respect the monetary policy independence of the Fed. And besides, there is not much they can do legally.
Right.
Their options are limited unless they can find a filibuster-proof majority in the Senate to change the Federal Reserve Act and do things. I mean, some reforms of the Fed, I think, could improve
Probably
its
good.
efficiency and transparency, but I'm not sure it's like top of their agenda, given everything else they have to deal with. So the Fed, I think, they do nothing because they need to know more about the budget deficit. If the budget deficit gets bigger, and in my view, the risks are rising, we're going to find out in early February, because given the schedule for passing the big budget reconciliation, which is like in May, perhaps more realistically by June, we need to have the budget resolution adopted by Congress in next month. And that resolution gives you the headline spending and revenue, or at least the Congress estimate of those, because then we'll have the CBO, the Congressional Budget Office, doing the scoring, that is giving its own assessment of the cost and revenue. So the Fed will need to know that to have a sense of whether we'll have a positive or negative fiscal impulse. For a positive impulse, we need a bigger deficit than we currently have. The other thing where they need more visibility is the tariff. And it's still unclear, but given that the tariff are going to be a source of funding, we will get a better idea next month with the budget bill. And so by the time of the March FOMC, I think they will have the parameters and they will be able to adapt their policies accordingly. So this month, I suspect they try to say very little other than Inflation is on track to go back to 2%. Growth remains strong. We wish the best to the administration and so on and so forth.
Right. So no one's calling for, so I'm saying like there's not even a full cut priced in
It's, I
till
think,
like
euro or
June.
below. Oh,
Oh,
yeah,
sorry,
yeah, yeah,
July.
yeah.
July, yeah, if that's or roughly around there.
And
Yeah,
by the
that makes
way,
sense.
I will change my call, which is no cut this year. I will change my call if, I think that policies like energy prices, or if I'm too optimistic on growth, on demand boosting. But at the moment, I'm like the Fed, I don't have enough detail to be able to change.
Yeah, yeah. Yeah, it's just interesting that generally fixed income has been trading okay. I mean, obviously it had a very big move leading up to 2 weeks ago, from whatever 3.8 to say the 10-year to 4.6 or 4.7, but now coming down. Okay. Okay, so the upcoming week, big events, big data, big data events.
So we have the PC data, which is likely core month-on-month is likely to be about 20 basis point, which is okay-ish. I mean, not bad, but not enough to change the Fed policy. We will get the first quarter GDP, which is likely to show growth close to a 3% handle. This is, I think, where the Atlanta Fed nowcast is. I think the consensus is a little below 3%, but around there. We have another piece of data which is
That's
important.
still pretty strong.
Oh, that's very strong.
Yeah, yeah.
And the combination of, slowing growth in employment and still strong, 50, I mean, very much above trend GDP growth means that productivity remains above trend. And that's a medium-term issue for the Fed. Is this productivity growth going to continue? And if so, it means that the wage growth that we have right now is consistent with their 2% inflation target. But, they are not sure, they
Yeah.
are not model-driven Fed, so they are reactive to prints, basically.
I don't want to get off topic too much. Just thought about how much do you think the the narrative that the reason the US is growing at 2.5 to 3% and Europe is growing at, I don't know, 1%, most of that is explained because the US is running a larger deficit. The government is, I don't
Um,
think so, but I'm sure you've seen that, or let's say now and over the last 2 or 3 years.
so it's not so much the deficit, it's a change in the deficit that basically gives the fiscal
So,
impact.
sorry, so, I mean, annual, yeah.
And
Yeah.
the problem with the US is not so much that the deficit increased this past year,
Yeah.
it's more that it did not decrease. That basically, with the pandemic, there was a huge increase in the deficit, not all of it, in my view, justified. Um, but the Biden administration decided to leave the normalization of the deficit to whoever won the election. So not to do any consolidation, so as not to have a negative fiscal impulse before the election. So I don't buy that. I just don't think the data supports that story.
Yep. Yep. Okay, great. Okay, anything else for next week that
So the Fed, the PCE, employment cost index, the GDP, that's about it. And for sure, we will have more daily pronouncement from Trump. So stay tuned, everybody. We will be posting on
yeah.
on Bloomberg.
I think we have some of the big tech as it will be announcing earnings next week as well. Like,
Yeah, actually, there was a really interesting development this week, which is China making available, actually open source, its own AI model. DeepSeek,
Yeah.
and costs there are a fraction of what US models, AI models, foundational model charge. And that's a real dilemma for the US government, a little bit like Chinese EVs, if you will. Right now, the strategy of the government is to cut access to Chinese EVs, which means that American consumers pay more for EVs because they have to buy non-Chinese.
Yeah.
And those are all expensive. And that benefits car manufacturers, American car manufacturers that hopefully will take advantage of the opportunity to produce affordable EVs. Anyway, we'll see. But with AI, the trade-off is a little bit more difficult because if you prevent people from using this Chinese, cheap Chinese model, which by the way is open source, so apparently it's very easy for anyone to
Yeah. I
replicate.
saw people.
The consequences are economy-wide. It's not just consumers, you and I trying using AI to find the best cooking recipe for, I don't know, chocolate cake. It's about the whole of the US economy being deprived of something that could really add to their productivity. So there is, a long-term issue there, not to mention the impact of our current American AI leaders being undercut with a much cheaper Chinese product. So that's a big trade-off there, and we have to see how the administration will react. But it's very interesting dilemma.
Yeah, definitely. Especially considering some of the big LLM kind of private companies like Anthropic and OpenAI, and like they've raised money at like astronomical, well, let's just say very large numbers. And apparently Chinese, these Chinese models were built like very cheaply. And the performance has been, well, I haven't looked into it deeply, but allegedly it's pretty close, and much cheaper to use. So yeah, very interesting. Um, okay, so that's awesome. I'll just highlight as some of the stuff that we've come out in this past week. So Henry released today update on the PCA model, uh, with a big focus across obviously on Europe. He also put out a nice piece. How bad is it in Europe? It's part one, manufacturing story, and
That was very interesting to me because I've been a Euro skeptic for the longest period of time. So I thought they were making a good case that maybe things are not as bad.
yeah, Bilal and I saw a bunch of clients this past week, let's say the past kind of 9 days, and people are very, very bearish on Europe, UK as well, maybe much more warranted for UK, but yeah, I mean, we know that our clients should know, our view that maybe we're due for a rebound in things like euro, yen versus the dollar, and especially in Europe, that just so much bearishness is priced in. So that's an interesting one. Um, uh, Antonio around, high, will long end yields, higher long end yields eventually kind of slow the economy. Quite interesting trade there. Caroline reiterating the long, the short India, long Korea trade, and also kind of supported by our emerging markets flow monitor. So if people haven't seen that, I should recommend that they check that out. A lot of interesting stuff around um, oil from Varesh, and you know accurately called that the rally in oil would stall from the new restrictions that the U.S. are putting on kind of dealing with Russian oil, and now especially with the push by Trump to get OPEC to produce more model portfolio. We did the People didn't see it, that it was great, the emergency webinar focus on Trump. I guess we could probably do this like every 3 days. um, yeah, and that's kind of want to wish everyone a good week. and hopefully kind of the volatility and kind of interesting markets continues.
Definitely.
Okay, cool. All right. Thanks.